Welcome to our online workshop entitled Borrowing Basics, sponsored by HSBC, the world's local bank, Center for Neighborhood Enterprise, and the City of Buffalo's Weed and Seed Initiative. Let's do this activity. To lend or not to lend. A customer recently applied for a loan at the bank which you manage. What would you be looking for in each of the following areas of this applicant in order to feel comfortable making the loan? So we have here credit history. Would you look at that? Employment history, income and expenses, savings, collateral, where they reside, the residence. What to look for in a lender. Choosing the right lender is just as important as choosing the right loan product. Lenders must provide a fair evaluation of those seeking credit. Not all applicants have the same financial backgrounds, and some pose more risk that they will not pay the loan back. This is known as a credit risk. Sometimes the lender may choose to not make the loan at all. Other times the lender may make the loan, but at a higher interest rate in order to compensate for the additional credit risk a borrower may present. Other times the lender may make the loan, but at a higher interest rate in order to compensate for the additional credit risk a borrower may present. What to look for in the lender continued. It is illegal for lenders to discriminate against applicants and borrowers based on many factors, including race, color, national origin, religion, gender, marital status, or age. There are many regulations designed to help protect consumers in the lending process, including the Fair Credit Reporting Act, the Fair Housing Act, the Equal Credit Opportunity Act, the Home Mortgage Disclosure Act, the Truth in Lending Act, the Real Estate Settlement Procedures Act, the Fair and Accurate Credit Transactions Act, or the FACT Act. What to look for in the lender. Responsible lenders. What to look for in the lender. So responsible lenders will explain all products and options available, provide clear disclosures and forms, make sure the loan fits your needs and is affordable, provide good customer service by answering your questions timely with convenient and timely handling of your loan payments, and provide a clear loan statement to you each month. Responsible lenders will never pressure you into signing today, hide any fees or costs. Ways to borrow. There are different ways to borrow money, including face-to-face or at a branch location, by way of mail or phone, or over the internet. The following are some common types of loans: credit cards, mortgage loans, auto loans. Understanding each type of loan and what to look for and ask about can help you save money. Credit cards. When used responsibly, credit cards offer convenience and can be more safe than carrying cash. Be sure to choose the right card for your needs by comparing APRs and interest rates, grace periods, method of calculating balance on which interest is charged, any fees that may apply, including annual fee, late fee, over credit limit fee, return check fee, cash advance. Credit cards. For any credit card you may use or carry, you should know all fees associated with the credit card. Know your annual percentage rates, which may apply to purchase, balance transfers, cash advance, including any introductory offers. Always make at least the minimum payments by your due date. Know when penalties and fees may apply, including how interest is charged or if your rate may change. Know when you will be able to pay off any purchases that you charge to your card. Understand how your interest will pay in addition to the purchase price of any item if you are not able to pay your balance off in full. Keep your balance to no more than 30% of your available limits. Mortgage loans. For many, home ownership will not be possible without borrowing. A mortgage loan is likely to be one of the largest financial transactions in a consumer's life. Choosing the right product and right lender is critical. Preparing financially to find a loan at the best term possible can have dramatic consequences. For example, let's say the loan amount is $150,000. The loan term is 30 years. The rate is 5.50%. The payment then comes out to be $851.68 a month. If you use the example where the same loan and now the rate is 7.5%, which is 2% more, the payment now goes from $851.68 to $1,048.82 a month, is a lower rate. then turns out to be $197.14 lower payments for a total of 360 months. Mortgage loans. Knowing the following about mortgage loans. What is the total amount of money you are borrowing? What is the interest rate and APR or annual percentage rate on your loan? What type of loan you have? Is it fixed rate, adjustable rate, interest only, or balloon? If your loan contains any adjustable rate, when can your rate/payment change? By how much can your rate and payment change, and at each adjustable period? Annually, over the life of your loan? What is the highest the interest rate and monthly payment can ever be? What are the monthly payments, and do they include amounts escrowed for property taxes, insurance, etc.? Auto loans. When borrowing money to buy an auto, there are generally two options available. Borrow from a bank, credit union, or other lender, or arrange financing through an auto dealer. Both methods of borrowing require that your finances be in best shape possible. Knowing ahead of time that your credit report and your credit score are strong can allow you to negotiate with confidence. Before you borrow, ask yourself, do I spend less than I earn? Do I follow a budget each month? Am I saving money on a regular basis? Do I have financial goals, and am I taking steps to achieve them? Do I have a strong credit report and credit score? Is this purchase a need or a want? Will I be able to pay off this purchase before the item has served its purpose? How much will this purchase really cost once I factor in interest and fees for borrowing? What will happen if I am approved for the loan? Do I know how much I can afford to borrow? Do I know what the current interest rates are for the loan I am considering? Let's wrap up. Borrowing money responsibly can help you achieve your financial goals. Access to credit at the best rates and terms available is crucial. In the next 30 to 60 days, review your credit report and credit score. Visit www.annualcreditreport.com for your free report. Set up a budget or review an existing one for your household. If you have savings, if you haven't started yet, get going. If you have been saving, save a bit more.